Welcome to the Global Wellness HQ family of podcasts. We are your international headquarters for resources and ideas and insight in relation to the 9 elements of holistic wellness. Join us as we interview local and international wellness experts and learn how you can implement and improve one element or dimension of wellness at a time. Our experts will share their practical tips on wellness in one of these core areas: emotional, intellectual, occupational, physical, environmental, financial, spiritual, social, or habitual. We created our family of podcasts as a resource for anyone who is looking to integrate the 9 elements of holistic wellness into their daily lives. Welcome to the show.
Welcome back to Cash Flow Club.
Specifically, we're going to talk about the balance sheet. Now, this is not meant to be an all-inclusive lesson. It's not meant to teach you everything you need to know to create financials. It's just to help you understand them. So I have an example here from the internet. Somebody on Etsy is selling an Excel template. My goal is not to sell you a template, so don't click through and buy the template. The whole point of this is to help you understand the balance sheet. So the balance sheet is one of 3 critical financial statements. I'm going to talk about the income statement another time and the statement of cash flows. Today, I'm going to talk about the balance sheet. So as a business owner, you need to understand what this balance sheet is telling you and the insights. We'll get into ratios and metrics another day, but for today, you need to just understand the high level, what is a balance sheet. And typically in small businesses, these are prepared annually for tax returns. My advice to you is in your business, you should be doing these monthly at a minimum. Ideally weekly, but monthly is probably where most people would get the most benefit quickly. So I'm going to share my thoughts on the balance sheet, and this is going to tie to cash flow because the balance sheet is a static image of our business at a point in time. And I'm going to share a couple of resources. One of my favorite books I think every entrepreneur should have. It's called The Lemonade Stand or The Accounting Game. I'll pull that up here. Okay, it's called The Accounting Game. My apologies. The Accounting Game, Basic Accounting Fresh from the Lemonade Stand. And the reason I recommend this for entrepreneurs and small business owners, it is a simple, quick read. It's not dry, and it literally uses a seemingly simple lemonade stand to show you how the financial statements all tie together. So it's one of my recommended reads. If you're an entrepreneur, you need to at least understand your numbers. Because if you don't understand your numbers, you're subject to the randomness of the universe. If you're lucky, you get the advice you need when you need it. I'm going to help you with Cash Flow Club find ways to ask for the advice before you need it. So with that in mind, this is a balance sheet. So the balance sheet is at a date in time, and it shows us a static image of where the business is at. So the important thing, the reason this is called a balance sheet is total assets equal liabilities plus equity. So you see total assets are 850, liabilities are 450, equity is 400, total liabilities and equity 850. So total liabilities and equity equals total assets. It's not a balance sheet if they don't equal, so there's a mistake. Again, my first piece of advice is I'm here to show you how to understand these. You need to have help preparing. So talk to your accountant, talk to your bookkeeper. There are great tools out there like QuickBooks Online or Xero that will help you do your books daily. You should always have your books up to date from day to day. So that's just my number one business tip. You to quote Peter Drucker, what gets measured gets managed. So if you don't know what your profits are, if you don't know if you're having profits or losses, if you don't know where your balance sheet is, how do you make decisions? So business is about decisions. It's not about impulse. So you need to have your financials done regularly. My When I work with larger companies, I'm going to be honest, their financials are done almost daily. Now they report monthly, but there's a daily process. So they can tell you today what is their month to date profit. That's where you should be with your bookkeeper or accountant. If they're not willing to get you there, if you need that information on that timely basis, you may need to find a new accountant or bookkeeper. I'm not here to talk about that. Let's talk about the balance sheet. So what you will see, let's look at assets first. There are current and then there are long-term assets. So current assets are short-term in nature, things like cash. Cash can be converted into other things, but cash is basically your balance in your bank account, maybe cash on hand, cash equivalents like T-bills, GICs. Basically, cash is what we talk about, obviously, in cash flow. And the reason we care about cash is cash impacts our ability to pay our liabilities. Now, accounts receivable, if you sell things to customers on credit, they have to pay you eventually. That's accounts receivable. And so usually that's the most liquid, and that by liquid, I mean ability to convert to cash. So we want to manage our accounts receivable. We'll have a conversation about that in another day. But basically, if we have accounts receivable and we're not charging interest, we're effectively giving our clients free financing. So we want to find ways to minimize receivables and turn them into cash. Inventory is goods held for sale. So that's, if we have physical, tangible goods that we're selling, obviously we want to look at, do we have obsolete inventory? How do we convert inventory into accounts receivable and then into cash? And then sometimes in business, you prepay things, you might prepay your insurance for the year. That's not going to be converted into cash. It'll just get used up over time. And then we have long-term assets that can be property and equipment, so buildings, vehicles, tools. Long-term investment, you might have some cash set aside in a portfolio. Maybe you've got a 5-year T-bill or something like that. And basically the idea of current assets, these are what are used to pay current liabilities. And then the long-term assets are ultimately things that add long-term, more than a year kind of value to the business. So ultimately, one of the first things we look at with cash flow is how do our current assets look compared to our current liabilities? And basically, the idea is we want to make sure that we have cash and receivables. These are our most liquid things, adequate usually to cover our current liabilities. If not, we need to look at how do we increase our cash. So that's one of the quick little tips is if your cash and receivables don't meet or exceed your current liabilities, you might have a challenge in business. Now, accounts payable, these are, you've bought things on credit, you have to pay for them. Unearned revenue, it's, maybe you have a year-long contract, somebody prepays, you haven't earned that income yet. And then short-term debt, that could be loan payments or other things. And then long-term debt, we care more about the payments and servicing of the debt. But again, if we have significant debt in excess of our assets, we're going to have a deficit in owner's equity, which means the owner is contributing to the company, not receiving from the company. So the owner's equity, these might be the shares that you've purchased, and retained earnings, it's just the historical retention in the company of accumulated earnings. So in this case, this company has historically had a total profit of $300. So that's how we come up with the liabilities and equity. We're going to get into some detail about some metrics and how we can measure things. But for now, you should just know that a strong balance sheet has equity and retained earnings. That's important. And the assets should exceed the liabilities. If they don't, you're not what we're going to call a strong balance sheet. So that's a little insight into the balance sheet. I look forward to questions or comments below. Thank you.
Thank you for taking the time to listen to our show. We hope that you enjoyed this episode, and we invite you to either click the link below or scan the QR code to register and listen to other episodes of our podcast. Or if you think your business or you would be a great guest to be on our show, we're always looking for experts in one of the 9 elements of holistic wellness. We'd love to have you. You can either click the link below or you can scan the QR code and complete our speaker intake form. Thank you, and to your wellness.